In the second video of our series on central banking, we will learn why central banks are useful and what the key functions they perform are. The Bank of England. Shortly after the establishment of the Bank of England in 1694, the UK government used it to obtain a loan, hence forcing it to act as the government's banker and trustee, particularly when it came to raising money. In their function as a trustee, central banks often bought government bonds themselves, an action also known as monetary financing. Even though such policies have continued to be used until now, they are, in recent periods, heavily frowned upon. Still, the most important responsibility of the central bank is its monopoly over the distribution of money, a privilege which evolved slowly through time. The benefit of having a monopoly over the supply of money is that it essentially means that a central bank cannot run out of money. In theory, a central bank can issue any amount of money it requires to satisfy its needs. Naturally, an uncontrollable increase in the amount of money would come at the cost of higher inflation, hence cancelling out any benefit from more money in the economy. A result of its unlimited ability to create money is that the central bank cannot really run out of liquidity. This leads to another important role of the central bank, which is to act as the lender of last resort. The term suggests that during periods of distress, central banks should lend against good collateral and at high rates to banks which are solvent in order to avert panics. To understand why this is significant, remember that, in general, commercial banks' main activities are the provision of loans and the obtaining of deposits from the public. Given that the money is lent out, banks only have a limited availability of cash to cover for potential deposit withdrawals. To use the words of James Stewart in the 1946 classic movie It's a Wonderful Life, "The money's not here. Your money's in Joe's house, right next to yours, and in the Kennedy house, and Mrs. Macklin's house, and 100 others. Why? You're lending them the money to build, and then they're going to pay it back to you as best they can." As in the movie, which depicts the Great Depression banking struggles, in times when many withdrawal requests could come at the same time, the commercial bank may not have the available funds to satisfy all of these needs. Thus, to avoid panicking depositors that they will not be willing to recover their money, it can borrow from the central bank. Thus, the central bank is also known as the Bank of Banks. Hope you enjoyed this video. Join us for part 3 of our series, Overviewing Monetary Policy. Hot Forex, Global Broker of Choice.